Laura Suter, Director of Personal Finance at AJ Bell, and today I am joined by Ryan Hughes, who is Investments Director at AJ Bell. We're going to be talking about the performance of the AJ Bell funds in the last quarter of last year, but also across 2023 as a whole. So Ryan, thanks a lot for joining me.
Hi there, thanks for having me.
What was performance like in Q4 of last year? How did things shape up?
Yeah, markets finished the year very, very strongly. Actually, both in the equity markets and the bond markets. What we saw was European equities finished particularly strongly, and also US equities continued their trend throughout 2023 and ended up having a very, very strong year. But it actually was broader than that as well. UK equities had a positive end to the year. If we think about the bond markets, then they finished the year very, very strongly, particularly UK government bonds, UK gilts, and UK corporate bonds. But again, that widened out much further into both the US market and emerging market debt too.
Lots of positive themes there, lots of positive performance news towards the end of the year. So what were the main drivers of that as we went into the end of last year?
What we saw during the final quarter was around mid-November was a real pivot point really, where markets got the sense that interest rates were likely to be cut at some point during 2024. Now that was driven on the back of weaker data around economic activity, but also signs that inflation was falling. So if we think about that scenario of weaker data leading to lower interest rates, then investors saw that as a positive sign for the outlook for the economy, in that should provide some stimulus to the economy, and that was both good for bonds and equities.
Do you think that this means that the UK economy and also the global economy is entering a different phase now if we're talking about these interest rate cuts after so long of talking of interest rate rises?
Yeah, I mean, we've had a really challenging 18 months to 2 years. We've seen interest rates rise rapidly, inflation really around the world shot up. We saw it go through 10% here in the UK. If we think about the environment we're going into, then that data is really reversed. So inflation falling very, very sharply. It's likely to go beneath the Bank of England's 2% target later on this year, and we should see interest rate cuts. So I do think we have entered a different phase, both in the UK and around the world, and that does provide a different outlook for the types of assets that we invest in the AJ Bell funds.
So let's turn more specifically to the AJ Bell funds. How did they perform last year and how did they end the year in that fourth quarter?
Just the AJ Bell range of funds managed to capture a lot of the uptick in markets and asset classes that we saw in the fourth quarter and therefore ended the year very, very strongly. So the overall performance for the year has ranged between around 5 and 8%, depending on which fund you are in. But a lot of that return did come in the fourth quarter. Markets were pretty flat really through much of 2023, and then we had that real surge into the final quarter. So I think they finished the year well. The overall return for the year, I think, is hopefully investors are pleased with. It's broadly in line with our expectations as to where we set out at the start of the year.
And so thinking about the year ahead and maybe that shift in terms of the next phase of the global economy, have you made any changes to the funds as a result of that?
Yes, we have. We have made a few changes to the asset allocation of the funds to really reflect those issues that we've been talking about and where we think the global economy is going. A couple of highlights in what we have done is there's a small increase in cash in some of the portfolios to reflect the rates that we can get on cash, and watchers will be familiar with where bank rates are at the moment and the higher returns you can get on cash-based investments. We've also increased some exposure to investment grade bonds, so that's high quality companies there who are issuing bonds. The returns there remain appealing, and if we do get interest rate cuts through this year, then that should be a positive, not just for the income that we get from those bonds, but also the capital return we can get from those investments. If we turn to the equity sides of the portfolio, then we've had a small reduction in US equities. They've performed very, very strongly over the last couple of years, and moved some of that money to put that to work in both Europe and Japan, where we think that the opportunity looks reasonably appealing. Now that does vary depending on which portfolio you are in there, so there is further information available on the website. You can see exactly what has been done in the fund that's most relevant for you.
Thank you so much for joining us today, and we look forward to catching up with you and the rest of your team throughout this year.
Thank you.